Hello everyone, welcome to Accounting Learning Hub. We will be proceeding with the principles of double entry. In the previous class, I gave out some rules to follow when solving principle of double entry questions. And we have this rule, debit the receiving account, credit the giving account. And the other rule, we debit purchases, expenses, and asset accounts. And we credit revenue, liability, and sales accounts. And I gave out some steps to follow when solving principle of double entry questions. Do you still remember, or should I remind you? Okay, I'm generous. Let me remind you. The first step is identify the transactions. You need to identify the particular transaction that occur. Because if you don't know the transaction, it will be hard for you to know the account that will be involved or solve that particular question. So you have to identify the transaction. Then the next step is to identify the accounts that are involved. I told you that all transactions have at least two accounts that are involved in it. So you need to identify the accounts that are involved. And the last step, identify the giving account and the receiving account. Once you have been able to identify the giving and receiving account, then you can now apply this rule, debit the receiving account and credit the giving account. We'll be solving these 5 questions today. So let's start with the first one. Started business with cash, 20,000 naira. Now, the transaction is that the owner of the business introduced cash into the business and the cash is 20,000. So the next thing is to identify the accounts that are involved. Since the payment is by cash account is involved. Then the next thing, which other account is involved in this particular transaction? If you look at it, started business. When you start business, it means you introduce capital into the business. So the other account will now be capital account. So now that we have identified the accounts that are involved in the transaction, capital account and cash account, the next step is to identify the giving account and the receiving account. We started business. Please, sorry for the interruption. We started business with cash. It means our business received cash of 20,000 naira. Under the accounting concept, there is this concept called business entity concept, and it states that a business is treated as a separate entity from its owner. So when the owner introduces money into the business, we treat the owner and the business separately. So for the owner gave out money, but we are not considering that our cash account, we received money. So our cash account will be the receiving account and it will be debited, while our capital account will be the giving account and it will be credited. So solution 1, we debit cash account, then credit capital account. Do you understand that? So the other part of the transaction, the other question on the board, paid insurance by cash, 5,000 naira. There's an expense, and the expense is insurance, and it is settled by cash. So we've known that the transaction is by cash and it is an expense. The next thing is to identify the accounts that are involved. We have insurance account, and since it is settled by cash, we have cash account. So question 2. Now, which account will be debited and which account will be credited? Our insurance account is an expense, and if you follow this rule, we debit expense account. So let's debit insurance. Then the payment was made by cash, 5,000 naira. Our cash account is the giving account. So we credit cash. Do you get that? If yes, let's proceed with the third question on the board. Question 3. Received refund of insurance, 2,000 naira cash. In this question 2, we paid insurance by cash, 2,000. And in question 3, we received refund of insurance, 2,000 naira. That means it is a reversal of this first transaction. The first one, we made the payment. Maybe there was an error in the transaction, so the insurance company now refunded us. So when we receive the refund, we have to treat it following the reverse of this first case. That is, the account we debited in the first case will now be credited, and the one we credited in the first case will now be debited. So that is simple. Debit, credit. And if you want to follow another rule, now we received cash of 2,000 naira as refund of insurance. So the receiving account is cash account. And then the giving account is now insurance, because the money was paid from the insurance company. Insurance. The question 4. Bought office equipment by check. We purchase office equipment. Are we going to regard that as purchases or what? Many students often make the mistake of regarding transaction like this as purchases, but it is not, because the office equipment that was purchased was not for the purpose of resale. We purchased the office equipment so that we are going to use it during the course of our business, not for the purpose of selling it for profit. So when we buy any asset, we debit the asset account. But when we buy goods, we debit purchases account. And the payment was made by check. So this is not cash, it is by check, and we are going to debit the other transaction. The other account involved will be bank account, not cash account this time, because the payment was made by check, not by cash as the previous cases. So what we are going to do is question 4. The accounts that are involved, we have bank account, and we also have office equipment account, because office equipment is an asset, not goods. So we debit, credit. Which of the accounts is the receiving account? When we bought office equipment, our office equipment increased, so our receiving account should be office equipment. And the payment was settled by check. That means the other account is bank account. And when we made payment by bank, our bank account is given. So we are going to credit our bank account. Cash sales 50,000 naira. This one is quite simple. We have cash, we have sales. Those are the two accounts that are involved, and we just have to decide which account is giving and which account is receiving. When we sell our goods, we are receiving money and we are giving out our goods. That means our cash account is the receiving account and our sales account is the giving account. And if you follow this rule, sales account is credited and cash is an asset, current asset. It will be debited because our cash increase. Do we understand that? So debit, credit. So what account are we debiting? We are debiting cash account. And we are crediting sales account. This will be all for today. We'll be continuing this principle of double entry in the next class. Because under principle of double entry, there are different kind of transactions with different treatments. So we have to solve as many questions as possible. Please stay tuned so that you'll be able to master this principle of double entry once and for all. Please like, comment, and share. If you are yet to follow my page, kindly do that now. Thank you very much. See you in the next class.